What if the best opportunity in XRP comes when everyone has already given up on it? Right now, the data is showing retail sentiment is near peak fear, wallet returns are deeply negative, and yet institutions are quietly increasing interest. At the same time, the macro backdrop is tightening, with US savings rates dropping again. So the question is, are we looking at the final stage of capitulation, or just the calm before another leg down? Let's break it all down. Quick disclaimer, this is not financial advice. This content is for educational and informational purposes only. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, your daily breakdown of the biggest moves in crypto, macro, and institutional adoption. On this channel, we cut through the noise and focus on what actually matters, where capital is flowing, what institutions are doing, and the trends shaping the next phase of the market. So if you want to stay ahead of the curve, make sure you're subscribed. Let's start with one of the most important on-chain signals right now. XRP holders are down an average of 41% on their investments over the past year. This comes from MVRV data, which essentially measures whether investors are in profit or loss. And here's why that matters. When MVRV is high, people are in profit and more likely to sell. When MVRV is low, people are in loss and selling pressure decreases. Right now, XRP's MVRV is at its lowest level since the FTX collapse in November of 2022. That's not just a stat, that's a psychological signal. We are in what traders call the blood in the streets territory. And historically, this type of environment creates lower downside risk and better long-term accumulation zones, because the majority of weak hands are already shaken out. But here's the catch. Low MVRV doesn't mean price goes up immediately. It just means the risk-reward starts shifting. Now let's layer in sentiment, because this is where things get really interesting. According to the data, XRP is currently the number 4 crypto by market cap, but its FUD is at its third highest level in the past 2 years. Think about that. You have a top-tier asset with massive awareness, and yet sentiment is near extreme lows. Historically, when this happens, markets tend to move against the crowd. There's even a clear pattern. When bullish commentary disappears and bearish sentiment dominates, the probability of a rally increases. Why? Because markets don't reward consensus thinking, they punish it. And right now, retail has largely turned its back on XRP. Prices dropped some 63% over the past 9 months, and confidence is fading. That's exactly the kind of environment where reversals can form. But again, patience matters here. This isn't a flip a switch moment. It's a process of accumulation and sentiment reset. Now here's where the story starts to shift. While retail sentiment is collapsing, institutions are starting to lean in, as they always do. A recent survey shows 25% of institutions plan to add XRP exposure by this year, 2026. That's not a small number. And even more important, XRP saw the largest increase in institutional interest across major tokens. So while retail is saying XRP is dead, institutions are saying maybe not. This creates a classic divergence. Retail is always emotional and reactive, and institutions are strategic and think long-term. And historically, the smart money tends to move early and not loudly. Another interesting narrative emerging, XRP may be less exposed to quantum computing risks than Bitcoin. The data suggests only 0.03% of XRP supply is potentially vulnerable, compared to that of Bitcoin at a 35%. Now, this isn't an immediate catalyst, but it is important for long-term positioning narratives, especially for institutions, because large capital doesn't just look at price and adoption, they also look at security, future-proofing, and technological risk, and narratives like this can quietly influence allocation decisions over time. Now let's zoom out, because crypto doesn't exist in a vacuum. The latest macro update shows the US personal savings rate dropped to 4% in February. That's the second lowest level since November of 2022. Why does this matter? because lower savings equal less disposable income. Less disposable income leads to reduced retail investment. Reduced retail flow leads to weaker short-term momentum in risk assets. So even if XRP fundamentals are improving, macro conditions can still suppress price action in the short term. This is the tension we're seeing right now. On-chain is improving risk to reward, sentiment is extremely bearish, institutions are slowly accumulating, and macro is still restrictive. So where does that leave us? Right now, XRP is sitting at a crossroads. The bear case, we have weak retail sentiment, macro pressure, and no immediate catalyst. For the bull case, we have deep negative MVRV, a historical opportunity zone. We're in extreme fear. We have growing institutional interest and long-term narrative strength. The key takeaway is this. This is not a hype phase. This is a positioning phase. And those are usually the phases people ignore. This is not a hype phase. This is a positioning phase. And those are usually the phases people ignore until it's too late. If you made it this far, you're already ahead of most. Drop a comment below. Are you positioned or are you waiting for another leg down? If you found value in this breakdown, make sure to like and subscribe for more. And as always, stay informed, stay sharp. We'll see you in the next one.